Welcome to the Twomey Stock Market Report. Today is November 27, 2022, and a couple of hot developments are happening in the stock market, and I'm here to tell you a little bit more about that. So let's quickly take a look at it. But before we do, go to TwomeyStocks.com. That's the number 2MEstocks.com. We just posted all our latest and greatest hot trades of the past couple of months and some spectacular gains. Check it out, and it's there to view. But now, let's go right into the Twomey Stock Market Report, and let's find out what's happening. Well, there's a couple of quick developments. I want to go to the diamonds. This is our proxy for the Dow Jones, and there's a couple of interesting facts. We are number one. This is the daily chart. Number one, the bear market rally, which eclipsed in mid-August. We're about to eclipse or get repelled at that high where the market took a drastic turn down back into the bear market territory. So if we break that, we are poised for future gains. We are also looking at this from year-to-date highs, January 22. We're only about 7 or 8% from that high. So now, what else is developing? If we look at the charts from a technical perspective, this is a technical analysis versus fundamentals, we see a couple of things. Look at the stochastics. That's our fast indicator and oscillator. Once we get over 70, 75 and the green crosses the red, we start paying attention that prices will improve. And certainly all of October took time for this to develop, and as markets started to advance. And now it's been pretty stable the past 4 weeks. And of course, we've enjoyed a runaway stock market on the industrials. Also, number two, we look at the MACD. The MACD is, same thing. The green crossed over the red early October. It took all of October to grow positive. Market came off the bottom, and once the green crossed the red and started going over the positive territory, the market took off, and we enjoyed gains there as well. But more importantly, if we look at some of our indicators that we look at from a trading perspective, it is the price point is now above our 9 EMA, that's the black line, our 14 EMA, that's our gold line, and the 20 EMA, which is, these are exponential moving averages, which is this green. In addition, it's above the 200, and it's also above the 50. The 50 is a very popular trading exponential moving average. A lot of major trading will start to take place once prices cross above that. So it's no surprise that the market has really advanced once that crossed over the 50 EMA. The 200 becomes another key indicator for major fund and traders out there. And once we eclipsed the 200 and bounced around for about a week and ran off from that. And that tells us that people viewed the 200 as a crossing point on a positive nature, and the market has taken off and risen from there. Now, are we reaching the point of pinnacle? Well, we've got this supply line. In other words, people who this is the last bear market high. People who didn't get out and rode it all the way to the bottom are going to say, hey, I've got my money back. I might as well get out or take some off the table. So we've got to compete with those sellers. Others are going to look at that and say, if it eclipses that, well, it's above that last high. We expect highs to run away, and we'll jump in. So we're going to see the next couple of days. We got end of the month coming, which fund managers will move money around to prepare for new 401k money that they have to invest the first couple of days of the month. So we should expect a couple of buying opportunities the 28th, 29th, 30th, and then, for runaway market if it continues on the upward path. Now, more importantly, look at here. I'm going to expand this. The 50 is nearing the 200 EMA. If the 50 crosses the 200, that's going to tick off a lot. When I say tick, the ticker tape of the stock. That's going to alert a lot of traders to go all in, because that's what they call the golden cross. It doesn't always mean the market is going to advance, but it does. It is one of those indicators that will tell traders, or algorithms, that an event has happened on the positive side. It should mean higher highs ahead. The last time we did that was back here in April, and that was the beginning of the bear market for the Dow Jones. So it has been, that's the death cross, when the 50 crosses below the 200, and then it doesn't always indicate a bear market, but it does usually mean a downtrend of some sorts. And in this particular case, a bear market did form. So that's what we're looking at. If the market continues to expand, then we would expect this golden cross to take place, and then we expect a lot of following trades, and then we would expect the jockeying by fund managers to handle the new 401k money that would be coming in. We're still at fairly high employment, so we still have people contributing to their 401k, and most likely it's going to be a positive influx of cash. So that's our suggestion. Keep your eyes open. It looks like the end of this week would be good buying opportunities before the first of the month. Take advantage of it, especially in the Dow Jones Industrial. The SPY is catching up, and if the SPY catches up, that's going to fuel the market. And we can see that, look how far the 50 is from the 200, quite a bit of range, but it is a positive uptrend on the SPY. And of course, the NASDAQ is the lagger. Small caps was doing well, but pulled back. Now, look at the 50 here, and look how far away the 200 is. The NASDAQ is the worst performing. We've got a lot of layoffs. The high-tech sector is not benefiting from all the stimulus money that the government is spending on the infrastructure bill and also the CHIPS bill, and then now the green bill. So that's a lot of money coming into the market. It's going to certain industries, but unfortunately it's not hit the high-tech. So they're struggling with higher costs, lower ad revenues, and the continued higher cost of their people that they need to hire and pay benefits on. No surprise, they're all cutting back drastically. We need the NASDAQ to catch fire, to push this market higher. If it doesn't, it's going to be a drag, and we will probably start leveling out at this stage. A couple of things that we wanted to talk about, put those in the back of your hat. Go to TwomeyStocks.com. That's the number 2, MEstocks.com. There you'll find tremendous information. We have all types of information there. We have the weekly newsletter, over 20 pages of detailed analysis and fundamentals, as well as technical. Also, you'll see our stock trades, our trends, and you can also sign up for our alerts. That's very important. You get emailed right to your desk, real time, all our stock trading alerts that are underway, and you also can participate in some of these gains. Look at this. We entered in August 3rd and August 12th. We got 42%, 35%, 36%. We had U.S. Steel, 16%. That was a month trade. We got into Blink, a charging station for the green energy bill. We got 16 and 21% in less than a month. We got natural gas, UNG. We played that a couple of times this year, 19, 16, 12% gains. So there's a lot of activity. We'll show you how to get these gains, and it's very simple. That's going to the Twomey Stock Market Report. That's the number 2, MEstocks.com. Thank you.